Hello, welcome everyone. Welcome to our channel Go Dubai, your go-to channel for anything related to Dubai real estate. So today we're going to talk about hot topic, Dubai in a shifting world. All of us know the kind of things that are happening in the world because of the current conflict, and due to the current conflict most of the economies have been impacted. In fact, all economies. I can't think of any economy that is not being impacted. It's important to then look at what's really happening on the ground rather than being grounded with some hearsay things, right? Because we always believe we should look at data driven inputs, we should look at facts before making any decision, right? So whether positively or negative, emotion based decision, right? Positive emotions like euphoria, excitement, or negative emotions like fear and anxiety, both are actually bad for decision making. What is good for decision making is looking at the logic, looking at the data, and looking at data driven inputs, right? And that's our attempt today. We'll try and help you understand certain data points, certain inputs, which can help you understand how is the overall UAE economy and how has it rather impacted the real estate sector. Before going there, of course, we'll look at these four aspects, but we'll split that into two videos. We are going to talk about the economic breakdown and national resilience in this video, and then the other two will take it in the part 2. Before we head anywhere, we need to understand UAE GDP, UAE GDP composition, and how is UAE economy made of, right? And most of us would be probably thinking that UAE is probably oil-based economy. And if you see this slide, you must already be wondering what is the contribution of oil to the UAE GDP. And you will be surprised to know that it's only 25%. A lot of people that I speak to, they think that it's about 50, 60 or even higher, whereas the oil contribution to GDP is only 25%. 75% comes from the other sector. Out of that 75%, 70% comes from the sector that are listed onto your right in the slide here, which includes real estate and construction, trade and logistics, financial services, tourism and hospitality, manufacturing and technology, and wholesale and retail. Right? So these are sectors that contribute to almost 70%, 25% being oil, and about 5% from a lot of other sundry services that contribute to the GDP. Right? So now let's look at deep dive into seeing how each of these sector has been impacted. Is it positive? Is it neutral? Is it negative? We look at very pragmatically. If you look at, we put these sectors into three different buckets. One is growing, one is stable, one is adjusting. What do we mean by growing? In fact, some of the sectors have benefited significantly because of the conflict. And these are the sectors that have been benefited significantly. One of them being oil and energy. Right? Oil and energy has got significant positive upside due to the conflict because of two, three main reasons. Number one, of course, all of us know oil prices are going up because of the conflict. Now, because of these prices going up, of course, there is a short-term benefit that the country is experiencing, but the much bigger benefit is coming from UAE's exit from OPEC and OPEC Plus. For those of you who do not know what is OPEC and OPEC Plus, it is a consortium of oil producing nations that came together to sort of control the supply so that they can control the pricing. UAE is part of it for last 4 odd decades, and UAE was able to produce only about 65% of its actual capacity, right? Because it was part of the consortium's guidelines as to how much it can produce to control the global oil prices. Now UAE has come out of it. What does it mean? UAE is now free to fix how much it wants to produce based on its capacity. Does not mean that UAE will start producing 100% from tomorrow, but UAE can make that decision based on its national interest rather than being bound by some other factors. Now that's a huge contribution, and you can see some of the agreements that have been inked in the last few days with other major countries. UAE is now becoming strategic partner when it comes to energy to all major economies in the world. Now this is going to help UAE in a big way. There's going to be a lot of fund flow that will happen, and that fund flow obviously will flow into the economy, and from economy to all the major sectors including real estate and construction. Financial services is actually growing because UAE showed a lot of resilience even during conflict. The financial services sector kept everything open, including banks, financial institutions, even the funds that have flowed in during this conflict, right? Funds like BlackRock, Blackstone, all of these people have actually pumped in funds. So there has been fund inflow that has happened even during this conflict, right? So it's actually growing. Manufacturing and technologies. This is one sector typically people do not associate UAE with. People feel that it's a trade hub, it's a tourism hub, maybe it's an oil hub. They do not see the kind of silent work that is happening in the space of manufacturing and technology, right? So a lot of work is happening there, and particularly right now, given the current conflict, UAE is taken on the agenda of being self-sustaining when it comes to defense production as well. So the UAE's own funded company called as Edge is a very big defense manufacturer. Recently, they've signed a 300 million euro contract to supply some key equipments to some of the neighboring countries here. So the UAE's intention is to be self-sufficient when it comes to defense equipments, not only being self-sufficient but also export to the nations around. Now, this is going to contribute majorly to the manufacturing and technology sector as well, right? Apart from that, anyways, even other sectors are growing very rapidly in the last few years. There is a lot of impetus and focus on manufacturing and technology sector. So if you see, these three sectors in fact have been positively impacted from the time conflict has begun. Now, some sectors like trade and logistics have been stable now, wholesale and retail, these things have been stable now. Of course, it was severely impacted in the peak conflict period, but now we see free flow of goods. Particularly, one of the major projects that has been undertaken by the UAE government is to build a pipeline to Fujairah and to make Fujairah the main port, right? And that makes sure that you are not dependent on Strait of Hormuz at all. And the plan was already on, the construction project was already on, but now it has been accelerated almost to the extent of 50% of the project is complete. So in just maybe another few months time, the project will be complete and the dependency on Strait will be completely gone, which means the trade will go even higher than current levels. And wholesale and retail, the demand has always been very stable even during the peak conflict period, and that is stable now as well. Now, certain sectors of course are adjusting, which has been impacted by the current scenario. One being tourism and hospitality. This has been impacted. So obviously, when such things are happening, the number of people who may want to come, they may want to postpone, they may want to do it a little later, because these are all discretionary activities, discretionary expenses. People have put them off for a future date, because of which there is a certain amount of impact that has happened. But the local market is absorbing all the available inventory when it comes to hotel rooms, etc. So hotels have pivoted their strategy into absorbing the local population. So that is going well, but of course there is certain amount of impact when it comes to this sector. Now, real estate and construction, there is some impact, right? Of course, there is impact to the extent of about 15-20% in terms of transaction volumes, and that's all. Don't go by here and say, oh, it is crashed and nothing is happening and all that. No, that is not true. Even during the peak conflict months of March and April, the DLD transaction show, we have a detailed slide on that, we'll share it with you. So there is only impact of about 15-20% on transaction volumes. That's all, right? And that is also expected to come back in the near future. If you look at this now in a very pragmatic way from a data perspective, you will see that major contributors to the economy, in fact, some of them are doing much better than before the conflict. Some of them have been stable all along, and some of them are adjusting, which may take a few more weeks or months to adjust. So that is the real impact that is happening. So not what to the extent some medias may be projecting, right? And then now let's see how UAE is built, how the country is built in terms of resilience, right? What is UAE made of, right? Is it just an economy based on some of these sectors that we looked at, or is there much more to UAE, right? Of course, there is much more to UAE, because UAE is a sovereign wealth power. So there is more than 6.6 trillion AED in assets under management. That is the kind of investments. If you see, the major investment vehicles of UAE are ADIA fund, Mubadala fund, which most of you may be knowing, ICD and ADQ. ICD is the company that owns Emirates Airlines, and some of the key strategic assets are listed below. Emirates Airlines, DP World, which owns the whole Dubai South infrastructure, Enoch Group, ADNOC Group, then there is Etisalat, and there is Emaar Properties. Now, these are major assets that contribute significantly to the overall revenue of the country, not only generating revenues within, also generating revenues from investments made across the world. This is not going anywhere. So this UAE being a sovereign wealth power is going to be there. In fact, UAE is committed to more investments in this time in strategic assets, right? So that is going to continue. And if you see, this is one of the very, very key slide, fiscal strength. Now, most of the countries, like even the so-called developed countries that we see here, you can see their debt to GDP ratio. How much is their debt compared to their GDP? It's extremely high. Whereas UAE has a very healthy 26% debt to GDP ratio. That means that UAE is not dependent on some loan and fund coming from either some international monetary fund or any other countries. UAE is self-sustaining. It is self-sustaining to the extent that debt is only 26% of the GDP. Coming to real estate market specifically, these are some of the numbers. I told in my earlier slide that the impact has been only to the extent of 20%. You can see that in the slide here, right? March, there has been a small dip of about 20%, and April also there has been a similar dip. In fact, March and April numbers are similar at about 13,900 transactions that have happened in both these months, and that shows the maturity of the market, that shows stability of the market, that shows the investor confidence that investors have in this market. So during the peak conflict, not many investors, in fact barring a few, most of them honored their agreements. Most of them went ahead with their purchase plans. Most of them would have paid a small deposit before the conflict, but they honored their agreements to complete the whole thing. Right? That shows the resilience, that shows the confidence that investors have in the market. Of course, during this time, you can expect some amount of slowness in decision making, and that's not only in real estate. I'm speaking to my friends across industries, right? So people who've been selling softwares, people who've been selling consulting services, whatnot, and that is something that we're seeing across the board. And in fact, real estate is much better because at least the transactions are happening. Some of these sectors we are seeing transactions have either completely stopped or stalled for the time being, right? So given that, I feel we are very well poised, right? We are very well poised, and if you are very smart, if you're very careful in choosing your investment, this could well be a good time to enter in as well. All right. So when we in our part 2 of the video, we are going to talk about how you need to go about investing in such uncertain times, right? So because 2021 was a market where you could have closed your eyes and invested in anything and it would have worked for you. But today is not that kind of a market. Today is a very different market. So you got to be very careful. You got to be very choiceful about how you're going to go about your investments. And to do that, you need certain framework. You need certain guideline in terms of how to go about it. Now that's what we're going to talk about in our part 2 video. Watch our video for more updates. If you're not liked or subscribed to our channel, please do it so that you get updates about our new videos. And yeah, looking forward to see you in the next video.